Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. Okay, so yesterday we started talking about how the Bollinger Bands, which are your two yellow bands here, are in the process of consolidating. They were pretty tight all the way back through February when we broke from the original highs. They expanded, obviously, as we plummeted to 2174. There's really no other way to describe that move. Since then, we've moved pretty violently off the lows, and then for the last 20 to 25 sessions, we have been pretty steady. The ranges have shortened up, and things have consolidated really, first above, and now really on either side of not only the daily mid-band, which is the 20, but we've been engaged with the 50, engaged with the 9-day constantly, and we've had some upside interactions with the 200-day and the 100-day, but we really just kind of flatten out here as these bands tighten up. We spent basically all day yesterday jammed up in this range. Part of it was a triangle, part of it was a range, part of it was just, the vol getting sucked out, and then we had then we had an attempted break down into the end of the day. That breakdown started here in the 2 o'clock hour, got stronger in the last hour of the day, and ended up coming down in Globex to test your 20-day simple moving average, or your daily mid-band, which is the midpoint of any consolidation on the daily chart. Okay, and if we're going to continue to consolidate, we're going to have these moves to the daily mid-band. And you saw what the bears did at the daily mid-band. They fell on their face pretty hard. It's been a straight up march up from there. The bulls were able to defend the 20, get back over the 9-day and the weekly pivot, which are locked up together again at 28.65. They've traded back up into these 80s. Now, as much trouble as the bears have had down at the daily mid-band, the bulls have had consistent difficulty in getting over the top of 28.85 to 28.90. Okay, so for me, we're just in the moment. It's not a really crisp range, but we're range bound somewhere between 28.90 and 28.20, depending on how wide you feel like drawing the lines. And in the regular sessions, that range has really consolidated into 28.90 to 28.50. You can see that here. You can see that on Tuesday. So Tuesday, Wednesday has been pretty choppy trading throughout most of the regular part of the day, with a couple of strong closes. They dump it out at the close. They dump it out at the close. And on Monday, they rip the close. So we've been joking in the room, we'll take a nap, we'll show up at 3, we'll do the one trade, and then, and then we're off. As we head into today, it's really all about the areas I just mentioned. It's about 85 to 90 up top. It's about how much do they want to battle over 65. And if they can break it down, can they do anything with the hourly mid-band, which comes in around 28.53. The hourly mid-band, which is here, did a good job yesterday, despite the chop and the whip, of defending price as resistance prior to the breakdown. I will be interested if it wants to spend today defending price as support on a move down. If the answer to that question is yes, then you have to wonder if today they try to break it up. If they can somehow deal with 85 to 88, 89, a reach up now with the amount of tension and compression that's built in the tape, the bulls could very easily reach 2,900 to 2,920, just based upon on the tension over the course of the week. Because you can't sit here and say, oh well, we're going straight up. No, we're not. We're just going back to where we were yesterday. So, it's range bound. It's a wide range, but it's range bound. So when it's ready to break out, because it just tried to break down, didn't happen. If it tries to break out, it can lift. Probably farther than people that are fighting the price short want it to, but it's going to do what it does. So as we head into today, watch 65, watch 85 to 90 on the upside. Watch 53 is the hourly mid-band. Volume weighted average price right now is 55. It'll rise rapidly. It's about 6:50 in the morning Eastern time as I'm recording this. It'll rise to meet price as time moves on. And then it's just a matter of doing what you can to control risk during the choppy moments of the day, because you have to think there's going to be more choppy moments, and then taking advantage of the larger moves, which are 10, 20, 30 handle moves. If you can do that, then you'll stay out of trouble. Okay, everybody have a great day. Be safe, be healthy, take care, trade them well. I'll talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.